Hiya, Kishore. Great. If you're still here, can you tell me if you can hear me? All right. It should be fine, to be honest. My OBS is showing me good levels and whatnot. Great. Okay. Yeah, I'm gonna start at 4 p.m. So I'm just gonna turn my mic off for now. But sweet. Thanks. Right. What's going on, everybody? I don't know how in depth this video is going to be. Usually when I'm back testing, we get through the week all right. Like we'll get quite, we'll have a good session. But because of non-farm payroll this week's delivery was quite messy. So I don't know how precise it's going to be and whatnot and what we can look at. But nonetheless, we will be looking at GBP and Euro. If you haven't yet, do drop a like. It all helps. And yeah, let me just quickly let the Discord know that I'm live. If you're not in the Discord yet, by the way, make sure to join. But yeah, I am looking forward to the new week. I do think that Monday is going to be quite active, so I'm excited for this week. I think there's going to be a lot of opportunity as well. But as you can see, we've been quite range bound, especially on dollar, and it is being reflected in the pairs, obviously. But I think as we start to get into the month of February, because January tends to be quite consolidated anyway, February tends to be when it loosens up, and then springtime's usually when there's some quite nice movement and price starts to free up a little bit. So I am looking forward to getting deeper into Feb. And I'm just going to put this in the Discord server. Cool. So yeah, let's take a look at dollar, see how he's delivered. I want to split up the week daily, but you can see we've traded up into this fair value gap on Friday. I will be doing a weekly review as well, so do keep an eye out for that. But let's split the week up on hourly just to see. Where did we start the week? We started the week over here. So that is that Sunday opening price, and it turns out we did actually create the high on Sunday, which is crazy. So that's things like weeks like this is what I mean. It's very rare to see the high of a week get made on a Sunday, even in that's just typical messy price action, because you don't anticipate it. And if you've been watching me, you'll know how much I use and value the use of the Sunday opening price. So when we're there opening and literally creating the high of the week and just trading lower from then on, it makes it much more difficult. But there's Monday, Tuesday, Wednesday. But other than the fact that we made the high on a Sunday, this week was classic in that we create the high, expanded to the downside, and then pulled back into the range. So in that sense, you could argue it was classic, and I guess there's not really anything wrong with that. But and then 5 o'clock there. Let's take a look, and then we can also look at the range which we've created and see how price returned back to that 25% level of the entire trading range. Price tends to return to the 50% level, so it was interesting to see that we only made it to here on the Friday. But like I said, I do think Monday is going to open up opportunity. But yeah, here's that high that was created, and then also you can see there's that massive gap. So if you watched me last week, you'll know I was talking about this massive gap between here and here. And it's interesting because you can actually split the gap up, and you can see how price makes its way through it. So we trade aggressively through that 50% level, and then look at how we bump it, and then we leave it. So there's only been downside delivery in this gap. As far as I'm concerned, price would need to deliver on the upside, as in on higher time frames. You can see there's pretty much only been downside delivery. There's barely any upside. So if we are bullish still on dollar, which I'm quite unsure about at this point, but I'm saying that there's ability for price to want to get up there. So anyway, let's go on to GBP, Euro and everything, and we will get down to the 5 minute or the 1 minute to do some back testing. And then also someone in my server brought up New Zealand dollar and the New Zealand dollar. Yeah, they brought up New Zealand dollar. I haven't looked at New Zealand and what else is there? New Zealand, Australian. I haven't looked at all those pairs in a while, so it'll be interesting to take a look at those. So in about 30 minutes, I'd say I'm going to probably take a look at those. But first, let's get down to business on GBP. And then also ICT's recent video. So he has a recent video about using GBP USD to explain a fair value gap which formed on a 15-minute. I think it's over here somewhere. So we will be looking at that concept which you taught, because it was very fascinating, and even I learned something even I learned something. So it's very useful. If you haven't watched it, I do suggest you watch it. The link is in the Discord, or just type in ICT Forex. I'm sure it'll pop up as the top result. But his most recent video gave us some more information on his fair value gap theory, which is great. So yeah, where are we? So here I'm also going to mark out that Sunday opening price. So at least the Sunday opening price, see here, I didn't even realize this until just now. We actually returned to the Sunday opening price. This is why it's so important to me, because on pound you can see our price traded back down into it twice and found support. But anyway, let's go down to the 5-minute, and I'm going to just be going through my normal process, which is marking out the Asia range and then looking at the certain times of day to see delivery and marking out specific setups. And I do this in pretty much all my backtesting videos. So if you haven't watched any of them yet, this is my process. This is how I go about trading. And ICT always preaches time and then price, time and then price. And that's why there's certain times of the day that you need to be looking for these things. So 3 a.m. there's always a setup. 8 a.m. there's always a setup. 4 a.m. there tends to be some kind of reversal or a strong continuation. 8:30 till about 9:30 there can be a consolidation or there can be expansion, and there's certain behaviors at these times which the more you study the more you recognize, and it's like footprints. Now obviously I can't go into a Tuesday saying whether 3 a.m. is going to give me a setup or not. There's times when I go into a setup and I realize it doesn't form until later, or it doesn't form at all, and that's completely fine. But my point is, these are the times of days which I'm actively in the charts looking for setups and anticipating depending on where the draw on liquidity is. So we are going to be applying some of that, and I don't know why my title on this video changed. There, change that. So this is the Asia range between 7 p.m. whoops, I got that wrong here, 7 p.m. and 8 p.m. and midnight. And basically here we want to mark at the high and low, and we want to drag it into the new day, because price will use this as a barometer, and you'll see how price uses it as a range and the 50% level to trade. So I'm also going to mark out 2 a.m. to 5 a.m., which is the London kill zone, which is my favorite personally, because I'm in London and I can just wake up, place my position, and then I can go back to bed or do whatever I'm doing. And that's between 2 a.m. and 5 a.m. Now the importance of the Asian range can be seen here. So usually at 8 a.m. there's a setup that would form. Here would be an example of that. I am going to drop down to the 1 minute just because I do want to see what we can look at. And if you look at the actual Asian range and you split it, you can split it into quarters. I tend to only split it into quarters if we're spending a lot of time in there, but the 50% level is pretty much enough. And you'll see our price find support right here on it. So let's get that delineated. And then ICT's also recently taught about the midnight to half past range, but I don't really use that. But let's skip straight to 3 a.m., which is when I'd be looking for a setup. So 3 a.m. is right here. And then in his recent video, he also explains that every quarter there's a fair value gap that forms. So it's not bang on 3 a.m. that the setup forms. It's not like I'm waiting for this candle to form and then I'm entering a trade. I'm waiting to see what happens. So you can see at this point, price has grabbed, accumulated, sell stops below here. We've found support on top of the 50% level of the Asia range. And then you can see we've had a large expansion. So not until this fair value gap forms, which is in the first 15 minutes, would I be looking for a setup. So this here, this candle here, as soon as we trade into this fair value gap, would be a perfect setup for me. So let's get that drawn out. Easier said than done, by the way. I know it sounds easy and it looks easy, but you know, obviously when you're live trading, it's a whole different experience. But the more you practice and the more you backtest, the easier this will become. I am going to quickly just close my window. Be right back. And yeah, so this is the fair value gap. So recently in his recent video, literally it dropped like 2 days ago. He was saying that every 50 minutes a fair value gap forms, and it's like a bus. And I guess this is an example of where that happens. So we have a 15-minute between 3 o'clock and quarter past, which is right here. We drag that through, and then we're waiting for a fair value gap to form, and voila, it's formed at the 3 o'clock time. So this is a perfect entry to go long. There's large expansion. We've taken out highs. I'm going to just make this a different shade just because. And then it's taken out highs. So this is a classic change in state, breaking market structure. And like, I'm happy when I see when you see fast movement like this. And again, time of day, it's happening at 3 a.m. If this was happening at any other time, I wouldn't be interested. But because it's 3 a.m. and I'm seeing us break through price like this with that kind of movement, that would comfort me in being in the ability to go long. So there's that fair value gap that formed at 311, and then you can go long as we trade down into it. We only just tap into it. So again, if you missed that, his argument is that there'll be another fair value gap that forms within the next 15 minutes, and we can study that a little bit more later. And I guess there's one here. But yeah, and then where would I want to trade to? So this is the beauty of the Asia range. So the Asian range gives you liquidity. So at the highs of the Asia range, there's liquidity residing, and usually at the lows of the Asia range, there's liquidity residing. Now in this circumstance, we're obviously quite bullish, and if we're going long, we'd want to be looking for some kind of highs to trade to. And in this case, a nice easy scalp would be from this up to the Asia range high, and then you can get out and you could be done for the day, or you can obviously hold onto your position. This is where the higher time frame comes into play. So if you're anticipating price to trade on higher, so if you're anticipating price to trade all the way up here, it's likely there's some kind of liquidity from the higher time frame or imbalance that you might want price to get to. Don't get me wrong, in this circumstance, apologies for that. My mic fell. But in this circumstance, I probably wouldn't. First of all, trading on a Monday is crazy unless I'm anticipating a lot of movement. So I didn't anticipate all of this expansion. We had a lot of expansion this Monday, but this would have been, I probably would have got out there and left it and probably missed out on all this just because I wouldn't expect that much movement on a Monday. But anyway, the point is, I'm taking all these counters into effect, all these points into effect when placing the position. Now if we drag that fair value gap in, if we drag that fair value gap further, you can see we tap into it one more time, creating relative equal lows below here, and then we come into the New York session. So let's get that marked out between 7 a.m. and 10 a.m. I usually make my New York sessions blue for the vibes. And then between 10 a.m. and 12 a.m. is London close. Now, I'm not really a fan of London close. I'm not the strongest at London close. But you can see we pretty much have a continuation. Again, relative equal highs. And we're looking for setups again. So the next setup would be 8 o'clock. He argues there's macros between like 7:50 and 8:10, and then 8:50 and 8:10. So we are going to look at some macros as well. Let's do that. So let's look at the 6:50 to 10 past and see if there's any setups that form. And then you can see there's a fair value gap here, but we don't even tap into that. But you can see our price consolidates and comes into this range. I guess we're only on the 1 minute. If we drop down to the 30-second, and I've never seen a 30-second chart, but I mean, you can, and there'd be imbalances within this wick right here, because there's wicks are gaps too. So you could argue that would be a setup, but I personally wouldn't be trading that. And then you can see how price is stacking on top of each other in terms of bullish order blocks. So let's take a look at this. So here, and then here, and then here. So every time price is returning into a bullish order block, these are all arguably setups to go long. And then you can see I have a large expansion, and then we get to our 8 o'clock hour where there should be more setups. Now here price just keeps running. This was the problem this is the problem which I found with this week. It was with this Monday, sorry. It was difficult because price just kept running in the essence that it didn't give us a chance to catch up. And then what's very typical is that because we had so much expansion during the London session, and then during because we had so much expansion between this day, like Monday as a whole, it made Thursday a lot more. It made Tuesday, sorry, a lot more messy. So yeah. Anyway, let's just take a look. We'll keep marking out what we can see. So you can see our gaps are forming, more bullish order blocks. You could argue this is a breakaway gap. And then here, accumulating stops, sell stops. And again, just lack of opportunity. So between 8 and here, 8 and 10.20, you can see there's a retracement and it's very high resistance. So when you see a lot of back and forth price action as price is trading down, that's high resistance conditions, and it can be used to your advantage in that if you're seeing that price is struggling to retrace, but it's, you know, very easily trading higher, it's likely that we're going to continue trading higher, and that this retracement is simply, you know, waiting until a certain time before it can continue. Here is a interesting setup. So if we look at this high right here, you see how we tap down into that right here at 10.22, and then we have a continuation with us dropping into this fair value gap right here. But again, being able to anticipate, this is what I mean by this week isn't the best of examples, because I'd argue that this behavior is unusual, especially for a Monday. And like I said, trading it, I struggled in general. And also, we don't have the higher time frame advantage in knowing where we were running to. But it's nice to see how we got above that Sunday opening price, and then you can see our price is treating it and consolidates around it and uses it as a support mechanism, moving into the latter part of the day. So yeah, here on this day, I'd say the best trade, the most realistic trade that I probably would have got in on this day would have been that London session 3 a.m. setup into the Asia range high. One, because I didn't expect us to be expanding so much on a Monday, and two, just because the times of day which I would usually trade, so 8 a.m. when I'm looking for my setup, you can see it doesn't really offer me much. Now you could argue, okay, you could go long here as it pulls back into a fair value gap, but even if I put my stop loss over here, it would have got shredded here. So in terms of anticipating that, not ideal. We are going to just go over into the next day because I don't want to spend too much time, because I do want to look at, I do actually want to do some analysis on the pairs, on New Zealand dollar and such. So let's quickly head over to the next day, which was, we're going to do the same thing, mark out the Asia range first. You want to get the high and you want to get the low. In fact, let me just copy these over. Now I've got so many. This is 7 a.m. Made that color, and then there we go. And you can see instantly price trades. Oh, there's the low. We take out that Asia range low instantly. Look at how we find support on top of that Sunday opening price, and then you can see we expand into the London session. Again, we expect the setup to form around 3 a.m. So you can see that we've had bullishness from the beginning of the day. We've taken out this significant swing high. Why is this significant? Because it's one, it stands out to me, and then we also have relative equal highs above there as well. So you can see our price is comfortably breaking through these highs. When you see price trading through these highs with no effort, you know, like shoop, and then here as well, you can just see it going, you know, it's easily going through all of these highs. That is very bullish behavior. And then you can see we come back down to the Asia range low. Again, this is the beauty of the Asian range. You can use the lows and highs of it as supports, because when we're below it, if we're bearish, price would have used this as resistance, but because we're bullish, price goes inside of the range and then uses it as support, as you can see here and here. We wait for 3 a.m. Now again, I'm going to apply this new theory which I learned from ICT in this recent video, that there should be a fair value gap that forms in the first 15 minutes, and do we see the fair value gap? I do, right here. So there we go, we go long here again. And the more you backtest and the more you see how these setups can form not every single day or every single trading day, And don't get me wrong, this is quite a messy setup in general, but the more you see it, the easier, more comfortable it is. And when you want to actually trade it, because you've practiced it a million times, you've seen 3 a.m. form, setups form, so why not trade it? Go long here, and then where would you put your stop loss? Now, this is where it gets difficult, because I would argue to put your stop loss below here, below this bullish order block, but you can see our price comes and grabs more stops below there, meaning that you would have been taken out, which isn't ideal. So this is where this setup isn't ideal, and also the trade anyway. Even if you was to go long here and you was staying in the position, and we're targeting that Asia range high, do we even tap it? I don't even know if we actually trade to it. Let's take a look. We just about take it out. I think it trades at the same price, so that wouldn't be worth the trade, which isn't ideal. But then you can drag this through, and then in the next session we simply just do the same thing. So we want to wait for 8 a.m. which should be here, and then there should be a fair value gap that forms, and you can see there's one here and here in the first 15 minutes. Wait for price trade down into that, go long, stop loss below the bullish order block, and then here we have a much more clean session, as in we have relative equal highs now above the Asia range since it was formed in London, here and here. So that's a beautiful trade up to there. And then if you wanted to go the extra mile, again, you could look into these highs from the previous day. So although, let's say we made a loss, we took a loss in the London session, we made it back during the New York session. Now, to be honest, anyway, moving out of a day like this, so moving out of Monday, and if you watched me last week, you'll remember me saying when we have a lot of movement on Monday, I anticipate the Tuesdays to be a mess, especially the Tuesday mornings, the Tuesday morning session, because that's the first session after all of that movement on the Monday. I doubt they're going to make it easy, you know. I hope you're finding this insightful. Do drop a comment, guys, if you're finding this useful, because I know I'm kind of just, briefly breezing over things, but you'll recognize the things I'm pointing out to you. It's time, and it's setups, and how they form, and how simple it is to identify them, but it takes a lot of overall context to appreciate it. But let's take a look at this setup. And again, I'm applying this brand new theory. I've never learned it before. 15 minutes, there should be a fair value. Every 15 minutes, there should be a fair value gap that forms. I find that crazy to think. And it doesn't mean you have to trade every 15 minutes, but it's like for example, we have a 15-minute time frame here, and we saw our fair value gaps form. But if we look at the next 15 minutes, which is here, where's the fair value gap? It's not there. So, and then he did say though, if it doesn't form in that 15 minutes, wait for the next one. So let's look at the next one. This is just me testing his theories, by the way, guys. So let's look at the next one. There should be a fair value gap that forms. Is there? Yes, there is. There's quite a few. So we have one here, we have one here, we have one here. Which one do you use? Well, you can be conservative and use this one or this one. And then stop loss below the bullish order block. And I guess you could trade that. And then there should be another one every 15 minutes, right? Do we see a fair value gap that forms? There's one down here. We don't quite reach it. There was a tiny one there. So yeah, it depends. I guess it's during the sessions, isn't it, that you want to be looking for these things. It is quite an interesting theory, and I will be applying it. But let's, in our imaginary trading world, go long as we trade down into this fair value gap. So we go long on this candle. We put our stop loss below here, because it shouldn't need trade. It should be respecting bullish order blocks. Now you can be much more conservative than that if you want. You could always put it below this swing low, because if you look at this fair value gap between this low and this high, and you drag this out and you mark out the midpoint, you see how price failed to even trade to that 50% level. That's the level of bullishness, as in price shouldn't need to come down there unless we're bearish. Like if price was to break that, it would keep running and it would keep dropping, is my point. So you could easily do that. And then where we're targeting, again, Asia range highs. Now remember, I'm not going to class this as a trade. I wouldn't be happy with this. I probably would have lost here. This would have been a failed trade. If you have a question, make sure you can drop it in the comments. Like, yeah, go ahead. Hopefully it's nothing too crazy. Yeah, relative equal highs formed and that would be a beautiful trade. Or you can hold on to your position. Let's take a look at 8:30 now, because very classic, between 8:30 and 9:30 price either expands or consolidates. So here's the 8:30 candle, which is actually where we enter the trade, very interesting, or just before. And then 9:30, which is here, you can see this is an example of where price expands, a slight bit of consolidation, and then 10 a.m. Now this is the London close. I'm not really a fan of it, but again, let's apply that same theory. First 15 minutes there should be a fair value gap that forms, so let's get that marked out. Do we see the fair value gap? Right here and right down here. So if we go long in there, stop loss below here, then where we targeting. Again, this isn't the best example purely because we don't have previous data, but ideally there'd be some kind of highs or something that we'd be targeting. Or if you don't have any highs or anything in the premium, like from the higher time frame, what you can do is you can use your Fibonacci. So this is what you call a measured move. And basically you can measure it up to 1 and 2 levels, and generally speaking price should be able to reach the second level depending on where you are in the expansion. Now we've already expanded an awful amount, so if we're at this point of the trading range, I'd probably only just aim for the 1, and then I'd probably get out of my position right there, and you can see we enter quite a strong consolidation after that anyway. So yeah, how long we got? Okay, right, 7. We'll look at Wednesday. We'll look at Wednesday, and then, wow, it looks like we're going to look at Wednesday morning because it becomes pretty much mess after 8 a.m. And then let's head on to actually do some pair analysis. So if we go to 7 a.m. H range again, and then 2 a.m. Wait, why am I doing this? I can just copy and paste. I always forget. Excuse me. So Asia range high, classic, and then Asia range low. Now, both sides of the Asia range has to be taken. I'm not going to explain this again. I always explain it every single backtesting session, but you know, seeing both sides taken is classic. And then let's take a look at our potential setup. So you can see our price starts running at 2. This would annoy me because I would wake up at around, for the 3 a.m. I'll wake up about 5 minutes too. So after seeing this, I'll be like, I missed quite a nice run there. Not a problem though. And then again, first 15 minutes there should be a fair value gap that forms. So let's test that theory. Do we see a fair value gap? Now I don't. So if we don't see a fair value gap that forms, he argues that you should wait for the next 15 minutes. So let's do that and see if we see one. Do we see one form? Nope. And then do we see one form? Yes. You could argue that this is a fair value gap, but at this point, after seeing an expansion like that, I'd be bullish. Also, after seeing us take out the low of the Asia range, I'd be bullish. Also, after seeing us trade back down into this range, into this point of consolidation. So you see this is an order block on a higher time frame. This move from here to here. So if we draw out that range, I'm going to make it a different color, just make it stand out. And if we drag that right through, so this is a bullish order block, and you see how we trade down into that. Look at this. Isn't that fascinating? So, and then to make it even more interesting, we trade down to the optimal. But what I wanted to show you was this. and you can see how price trades right down to the 25% level. So we're now trading to the 25% level of a bullish order block from the previous day. First of all, 25% levels are way more sensitive than 50% levels. It can trade down here, that's fine, and it would still be bullish. But the fact that it only managed to reach the 25% level shows a strong level of bullishness, which is supportive. Meaning that when I'm entering, if I'm waking up for the London session and I'm wanting to enter a trade, then I want to be bullish because we've just traded into a bullish order block and I'm expecting a continuation. So we wait for our ideal time, which was 3 o'clock. Did we see a setup form that was a bullish fair value gap within these 15 minutes? No. Did we see one here? No. Did we see one here? Yes. So I guess that's what he means by ICT was saying it's like a bus. You know, when you go to the bus stop and you just wait for the next one to come, and if it doesn't come, you just wait for the next one, or you miss it, then you catch the next one. I guess this is an example of it. Again, easier said than done, and I haven't practiced this in theory yet, but I'd love to think that it is this easy and that this will make trading a little bit more easier. Let me know what you guys think. But here's a fair value gap. If you want to be conservative, use that one. Go long. Where do you want to put your stop loss? Below the bullish order block, so we can put it below here. Also at the Asia range high, that's level of support. And then where we go into, again, we don't have past data really that we can use to our advantage. However, what did I just teach us? If we simply look at this range, now what I'm going to do is I'm going to use this high and this low. Why? Because this is the last high before we break it. So this is the high which we should be using to measure up, generally speaking. Standard deviation, and then again you can measure 1 at this point. We could measure 2, and you can see how we trade up to that. But what's interesting and where you can get very specific is when I think if we use volume, is it? I can't remember. I learned something crazy once. Here, look. So when you use volume, you see how that level 4, and then look at how price pins that. Now, being able to anticipate whether price is only going to trade to level 1, or only going to trade to level 2, or only going to trade to level 3, or only going to trade to level 4, being able to anticipate that is extremely difficult. I'm sure there's ways. I haven't learnt them, but yeah, it's fascinating though. So that's something to consider. I guess you could just look at price delivery, and you know, you could just study it. So once we get to level 1. Or you could partial. So once it gets to level 1, takes them off. Once it gets to level 2, takes them off. Once it gets to level 3, takes them off. But again, ideally we'd have something on the higher time frame from previous data that would support our thesis in expecting price to be able to trade specifically up to this level. So if this -4 level lines up with a beautiful fair value gap, or it lines up with a significant swing high, like a daily high or something, then that would make sense for us to anticipate price to be trading there. So yeah, and then same Asia range. Let's take a quick look. 8 a.m. First 15 minutes there should be a setup that forms. Now here you can see we have a New York reversal, so that's something to consider. Let's go to the 15 minute. Let's go first 15 minutes. There should be a fair value gap that forms. Is there one that forms? Yeah, there's a few that forms. There's one here. But you can see we also have a break in market structure. So there's one here, and right along here as well. So I guess you could wait for price to trade back into that fair value gap to go long, or you wait for the next 15 minutes. So I'm going to study a few things. First of all, let's say we wanted to wait for price to trade back into that fair value gap. It doesn't do that until the back of the 10 a.m. news, and then we enter a disgusting consolidation. But then from then on, price does, and we know on the back of non-farm payroll, drop off precipitously. And also that's the 25% level of this fair value gap. Is it? It's not a fair value gap. What am I talking about? But anyway, yeah, let's look at the next 15 minutes, see if we could get in a trade. So 15 minutes, let's say we don't find a entry. Next 15 minutes, do we find an entry? Yes. Here, so you want to go short. Where do you put your stop loss? Above the bearish order block. This is the bearish order block. All these up close. Stop loss above there, and then price doesn't manage to grab it, and you just hold onto your position until we take out. Until price gets down into the deeps. So easier said than done. That would have been a beautiful trade if it was that. Honestly, this whole 15-minute thing, I am going to be testing a lot more. I hope you guys have learned something from all of that. Let's do some pair analysis. What am I doing? Let's look at New Zealand dollar, because I heard someone in the Discord said it's looking a little bit juicy. Now, I haven't looked at New Zealand dollar in a very long time. But before I do that, I'm going to get myself some water. So I'm going to put a quick break, turn my mic off, and I'll be back in about 5 minutes. That was not 5 minutes whatsoever, but you get the point. What's going on with New Zealand dollar, guys? It's not looking the nicest. Interesting. So this is the monthly. It looks to me like price should just drop off the edge completely. As in, it's rare to see relative equal lows left like this without, them being taken as a liquidity pool. What's also interesting is that there's a tiny fair value gap right here. Let's get this delineated. That we haven't quite filled on the downside, so it'll be interesting to see if price manages to get down into that, and then you can see this massive displacement. So obviously we've just started Feb. Here's a fair value gap. If price is going to be bearish, then if we do manage to trade into this fair value gap, 50% is the highest it should go. But it does look to me like price would want to fill this gap, as in that's where it could be drawn to. And also it's in line, like if price is going to go down there, that would be in line with the theory that dollar will be trading higher, right? So if dollar isn't done in the premium, and if you've been watching me for a while, you'll know I've been wanting to see dollar fill this gap in for so long. So between here and here, I'm looking for price at this point to fill this tiny gap in the premium. So this is the low of the fair value gap, right? And you can see how we've kind of found, it looks like price might be finding support on that low. So if price does manage to get back into this range, and we find support, then I'll be happy to expect that price is going to get up into this premium, and then that would support that idea that New Zealand dollar would want to try and get down into that discount. So there is reason to expect that. Then we have a nice bearish order block. Look at that 50% level off that fair value gap. You can't make that stuff up. So we might find that price rallies a little bit more first, maybe takes out these highs, and then we get a little reversal on New Zealand dollar. Does anyone here trade New Zealand dollar? By the way, Dixon, we have not swing low. What do you mean by that? Three candle pattern on the weekly. On dollar, you talking about this swing here? 1, 2, 3. Or you talking about this 1, 2, 3? That whole three candle thing, I hear it, but you got to remember we have done work down here. So we've traded in down into a discount fair value gap and a bullish order block, and then look at how volumes respected that 50% level and then has left it nicely as well, closing with inside of the fair value gap on the higher time frame. And then this week volume has managed to remain within that fair value gap as well. So I think next week is going to be all about seeing how we treat this wick and how we stay inside of it. And if we do, then there's no reason for me not to expect that price can reach up into this premium. If that makes sense. But I'll be talking about more. I'll be talking about this on my weekly review. What we kind of displaced, but didn't create much of a huge. Yeah, exactly. There's no breakaway gap, is there? Like if price kept digging deeper and we completely disrespected this bullish order block, then I'd probably be a little bit more suspicious. But the fact that you know we're quite comfortably made our way, you know, back inside the range, it's a little bit interesting to me. But I want to carry on looking at New Zealand dollar real quick, just because I don't spend much time over here. Let's see, bullish order block. Yeah, you know what? New Zealand dollar is not looking too bad. Maybe I should consider trying trading the pair. Ooh. So I wouldn't be surprised if this bullish order block acted as a propulsion block. I'd like to see price trade down into that. And then now we have relative equal highs above here and an imbalance. I'm definitely going to pay attention. Let me add this to my watch list because I've got my eyes on that for sure. So that's New Zealand dollar. Let's look at Aussie dollar. On New Zealand dollar, I think there is SMT with AUD, and AUD took the week fair value gap. Let's take a look. I haven't seen Aussie dollar. Excuse my eating on the mic, by the way. Lol. Okay, I see. That's interesting. This looks like a rejection block level. There's that 25% level I was talking about from when we were doing the back testing. You see how we traded down into that? Very sensitive. What's interesting though is if if Aussie is gonna continue to trade higher now, that would mean that dollar would have to start dropping off instantly. So what's either gonna happen is Aussie's gonna get held in a consolidation whilst New Zealand dollar rallies. So whilst New Zealand, you know, plays about a bit. Let me see. Yeah, there's definitely something going on here, isn't there? I think the next couple of weeks are going to be really telling. Let's add GBP USD for the bants. Let's add Euro USD as well. And then I'm probably going to bring this live stream to an end. Wow. Yeah. Wow. For real, man. It's difficult. It is difficult. There's times like this. There's no point in like trying to be bang on because we'll just end up hurting ourselves. But like, it is interesting seeing you know, the divergence between New Zealand, Aussie, and dollar. That's very interesting to me, and has kind of changed my perception on how I'm looking at the rest now, because it's like, okay, there's clear willingness on GBP to trade higher, clear willingness on Euro potentially to trade higher, and a willingness for dollars to go lower, whilst these lot are here accumulating stops essentially. Yeah, I haven't looked at all of that. I haven't looked at it in ages. Commitment of traders. There's another one as well. The bonds. Is it the bonds? 15-year Treasury bond, 30-year. All of that. I haven't looked in so long. I probably should, but I think next week's just gonna be really telling. As much as I wanted to see this little gap get filled, you know what? If this being left open is probably more indicative of bearish price action anyway. It was failing to trade into it. You know, price trading to get up there anyway. Yeah, you could argue. So, yeah. But anyway, guys, thank you all so much for watching. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list. They still favour shorting, but it's starting to shift. Yeah, I think, like I said, next week's or so, I reckon. Gold's nearly at my target. I didn't realise gold's still rallying like that. In fact, I've been looking for gold to reach up to that price point. That's interesting. But we know that gold's been off as compared to dollar, haven't we? But I didn't realize that gold's been rallying like that recently. So yeah, it's gonna be very interesting, guys. Make sure to drop a like on this video, it all helps, and I'll catch you guys later with my weekly review. And also message me in the Discord, I'm active over there. So yeah, thanks so much for watching. I'll see you in a bit.